Hello friends, in continuation to what we have been discussing so far around the reversal patterns, there are a few more interesting reversal patterns that we should be talking about. In order to complete our understanding of what are the various types of reversal patterns. And in this particular video, we will be talking about wedge patterns. A wedge pattern can be of two different types, a rising wedge or a falling wedge. So let's try to understand what a wedge pattern means. A wedge pattern is a typical reversal pattern similar to what we have discussed or covered in the previous videos. And in case of a wedge pattern, the band within which the price is moving in a defined trajectory or a trend, the band will start squeezing. So in case of a rising wedge, the band will start squeezing towards the top, and in case of a falling wedge, the band will start squeezing towards the bottom. And in line with what we have covered in the reversal patterns, in case of a rising wedge, your band is squeezing and your EMEs will start acting as a resistance once the pattern is complete. And before the pattern is complete, the EMAs were acting as a support. And in case of a falling wedge, your band is also getting squeezed and your EMAs which were acting as a resistance will start acting as a support now. These wedge patterns provide you with a very good risk-reward ratio if identified at the right time. So let's look at a few examples to understand what these wedge patterns imply. So let's look at a few examples of a rising wedge and a falling wedge pattern. So as you can see on my screen, I have plotted the chart of a given stock, and the band within which the price movement is happening, this band is clearly being squeezed or narrowed. And the EMEs which were acting as a support will typically start acting as a resistance upon the completion of the pattern. If you would have noticed, in some of these examples that I am discussing, I have not plotted the name of the stock. The reason being that if you remember the basics that we have covered in the previous videos, in technical analysis, we should not give much importance to the name of the stock or the company, because we are not trading the stock, we are trading the setup. And if the setup is giving me a buy or a sell signal, that is what I am expected to do, because that is the discipline element of technical analysis. So in this example, this is the typical rising wedge pattern where the band is getting narrowed, and you would be able to see that there is a visible negative divergence in the RSI, which indicates that the uptrend may take a temporary pause and there might be a corrective phase that kicks in very soon. Also, I have plotted a mean reversion line on the RSI in this particular example. As we have covered in the last video, a mean reversion typically implies that the oscillator indicator is not able to sustain beyond a certain level or a certain threshold. So in this example, the RSI is not able to sustain above 70-75 levels. Whenever the RSI has reached that level, the stock has seen a correction that kicks in. Likewise, when the pattern is nearing completion and there is a visible negative RSI divergence, there is a strong probability that the stock will now enter into a correction phase, which means if you have a long position in this stock, it might be wise that you book out your holdings temporarily and re-enter the stock at lower levels, and you reduce your cost or your purchase price. And if you are a trader and this is a FNO stock, you might want to trade in futures and options where you are allowed to short sell in the futures side, or you can buy a put option or you can sell a call option. That depends upon the strategies that you employ in your trading and investing journey. Also, if you notice, the MACD has started giving you a bearish crossover and it has started consolidating, although it is still in the positive territory. Do remember, when you are looking at charts, all the indicators may not necessarily convey the same information. Some indicators or some tools may give you contradictory explanations or contradictory views. So always remember, it is your practice and hard work which is what will help you define what view you should follow and what view you should ignore. And always try to look at the stock price chart in conjunction with the broader market indices. If you are looking to enter into a short position when the market is bullish, try to avoid or try to be very sure of what you are doing, because that is a contra trade. The market is going up, but you are looking at entering into a short position. So if your views are in conjunction and in line with the broader market movement, the probability of success increases manifold. Taking the example of a falling wedge pattern, as you can see on my screen, this is a stock price movement where the stock is going down and the EMAs were acting as a resistance, and upon the completion of the pattern, when the band is being narrowed, your EMAs typically will start acting as a support. And if you look at your oscillators like RSI and MACD, the RSI is giving you a positive divergence and the MACD is giving you a bullish crossover. Always remember, if you are able to spot a falling wedge pattern, which means that your downtrend may temporarily pause and uptrend may follow, it should be aligned to how the broader markets are performing. If there is negative sentiment all around, then you have to be very cautious when you are taking contra trades, because patterns and technical analysis is not an absolute science. There is a probability that the patterns will work and there is some probability that the patterns will fail. So look for similar pattern formations on the same chart in the historical periods, in the past periods. And if these patterns have worked in the past periods, the probability that these patterns will still work in the current period increases. Because if you remember, history repeats itself. That is one of the fundamental premises of technical analysis. So always remember that you need to understand and imbibe these rules when you are looking at chart pattern formations and accordingly take your trades. So I hope this video was informative and you are now able to make more sense of the wedge patterns, the two variations being the rising wedge and the falling wedge. And once you apply techniques like EMAs and RSI, you will be able to get more validations in your views. So folks, what are you waiting for? Start practicing more and start using tv.dhan.co, where you have all these features available and you can use n number of technical indicators in your chart without any limits or without any cappings. The more you practice, the better would be the outcome of your trading and investing decisions. So stay tuned for the next video where we'll cover the final set of reversal patterns and then move on to the continuation patterns. Thank you and good luck.